Hi, I'm Patrick from the Adams Principle. I've got a little bit of a timeline. Lots have been happening since the FOMC meeting, and I just want to sort of take you through my timeline before we go into the charts. So there's been lots of a progression on central bank policy from the FOMC, Draghi and the ECB and the PBOC, and they've all been quite dovish. In particular with the FOMC, only 3 months ago, there was some Fed bashing from Trump. It was very much the way below neutral comment. Then it was just below neutral. And now we're being patient and we're having data dependent. So with that in mind, in addition to that, we've got the OIS pricing out a rate hike in the US and Eurodollar futures pricing a rate cut. This is really important as a backdrop for the first slide. So the first slide here, after the FOMC, is Eurodollar real yield government spread. Obviously, it's got spot there, way lifted. It was a dollar story. It wasn't a risk story. And personally, I think it's overdone. But if you look at the 10-year real government yield, this means this strips out inflation, basically. It's probably a truer indicator, a truer representation, and it does point to more upside. So the next slide, if you look at Eurodollar, here we go. Again, we kissed, we broke 114.50 around the 100-day moving average. We kissed 115.15. We're hovering around that moving average. This looks bullish. I do see more upside, but I do see it is quite sticky, so don't expect fireworks. Moving on to the next slide. So the biggest recipient of the dovish FOMC was the Aussie dollar, along with stocks. Broad stocks were lifted, and Aussie dollar, very good correlation with Chinese equities there. So the next slide. This is Aussie dollar, and just to say, 73.30 is the mother of all levels. We kind of got to 72.95 recent session highs, and that level is incredibly strong on the weekly as well. I just see, if we do get a breakthrough on the Trump tariff story, you could have that really properly tested. I don't see it higher. So the next slide, yeah, this is quite interesting. Dollar yen, I thought having, there was a story leak from the Wall Street Journal saying there's going to be a pause in QT. I thought it would be risk on, but it wasn't. It was a dollar story. And if you need confirmation of that, just have a look at dollar yen. All the core pairs were lifted, dollar yen lower. So all the risk pairs like Aussie yen, Euro yen mixed. So this is quite clear to me. The range is 108.15 to 110, the big figure. And that's pretty much it from me. My name's Patrick Reed from the Adams Principle. I hope these slides are useful. You can catch me on LinkedIn. Thanks very much.